Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Brian Philpot. He's the CEO of AgAmerica Lending. We're going to learn about the economic impact of COVID-19 on U.S. agriculture. Brian, it's great to have you with me. Thanks so much for joining me on Trade Talks.
Great to be with you today, Jill.
All right, Brian, tell us about AgAmerica.
AgAmerica is the only agricultural mortgage REIT in the U.S. and one of the few agricultural real estate lenders that covers the entire United States from coast to coast.
So, Brian, tell us about some of the income and price trends that you're seeing within the farming sector.
Yeah, a lot of the news here recently since the coronavirus lockdown started, has been pretty negative related to agriculture. We've seen prices in a couple of products that have not been affected, namely wheat, orange juice. A lot of parents have run away from the sugar content orange juice over the last decade, but are running back in because of vitamin C. But other than that, I think most areas of agriculture in terms of pricing, we've seen negative price trends since the start, and some improvement here over the last few weeks. Corn, of course, highly dependent upon ethanol and oil, and so it has the double whammy of what's happening in the ag economy, but also what's related there with the with what's been going on in the global oil market. Soybeans affected likewise because of what's happening with the meat market. Of course, we've had the impact of slaughterhouse production facility closures, and that's affected the meat herd and the meat demand, which has in turn affected the demand for soybeans. You've seen the pricing in the meat sector as well have some negative price trends. What's happened over the last couple of weeks, we've seen some rebounds, and that's been due because one, I think we've seen some normalization of what's happening in the food chain, the logistical food chain, but also we've had some pretty sizable purchases the last few weeks from China. Of course, everybody's been watching from the beginning of the year with the trade deal as to whether China was going to come through on the $35 billion worth of ag purchases this year. And, there was some negative view toward that, especially after what was happening with the pandemic. But they've come through the last few weeks with some purchases, which has helped as well.
All right, let's take a look at real estate values here in terms of assets and debt, and then, of course, cropland valuation as well. I think part of the concern is that the debt is rising just as quickly as asset value.
Yeah, I think agricultural real estate, unlike other classes of real estate, is not really relying on debt. So, yeah, you see there that real estate debt has risen over the last decade. So have real estate asset values, and over the long term, agricultural real estate debt to agricultural real estate values have always hovered between 10 and 15%. So while it's going up in real terms, it's really in terms of a percentage of asset values, it's not going up. What we tend to want to take a look at is the underlying liquidity and the underlying cash flow. And so if you look at U.S. cropland valuation, right, what is the value? Is it tied to some intrinsic value? And we see that values that are out there in the market over the last 10 years, while they have risen, those values have stayed below what the cap rate valuation would otherwise indicate, which would be the capitalized value per acre. So real estate values have good fundamentals behind them, and as of right now, with what we're seeing in the market, unless you feel that there's some sort of fundamental demand problem in food, these real estate values should stay strong, and we're not seeing softening yet.
All right, and let's just take a look at commodity futures. I mean, everyone knows that the energy complex certainly experienced unprecedented volatility as we've gone through COVID-19. I mean, demand was soft prior to shut down in our global economy. Are there any other areas within the commodity space that saw that level of volatility?
As corn, you're referencing?
Yeah, corn or any of the other ones that we can see on this chart.
Yeah, with the energy sector, I think corn is the obvious one. What remains to be seen as you think about energy is the price of inputs, right? Fertilizer, oil and gas, and of course, it's been a positive that the prices are dropping. Farmers have not seen that, and that's not inherent in their operations yet. But as it relates to the energy sector, not at this point. Food prices have generally in these downturns if you look back, have been inelastic. They really have not correlated with other things that have been tied into what's going wrong in the economy. This is kind of the first time. And is it related to a supply and demand issue? Well, you could argue in some areas it is, but when you shut down for fresh fruits and vegetables, when you shut down 50% of the demand side with restaurants and hotels all at once, that certainly has an impact on the market, but it's not some long fundamental issue.
All right, and if we take a look at our last chart here, this is the actual fiscal response that we're seeing for the farming sector.
Correct. The net farm income was projected to be $92 billion by the USDA at the beginning of this year, before coronavirus. And after all of this, no one really knows where it's going to be. They estimate that we've already lost in the ag sector about a third of that amount. So, the U.S. governments everywhere have made a fundamental choice that you have to create a backstop for the agricultural sector. And, we have floods, we have other weather events, hurricanes, droughts, that sort of thing. And so we've made a choice that we can't have mass bankruptcies, and we've got to underpin that. And in this case, huge impact on farming, and Congress came through with about $19 billion worth of direct aid. Obviously, it's weighted toward cattle and crops. Is it enough to make up for the losses? No, it's not. And that's why Congress is now already talking about a much larger allocation in the next bill if and when that happens. And it remains to be seen, when that can come through and what impact it'll have ultimately on this recovery.
All right, Brian, thank you so much for joining us on Trade Talks.
Sure thing, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.